The dollar is standing on the other side of almost everything you trade. We said it back in the very first video. Roughly 89% of all Forex volume has the dollar on one side of it. So on most mornings, your real first question isn't what is Euro USD doing? It's what is the dollar doing? And most beginners answer that by opening 6 charts, squinting at all of them, and taking a guess. So today's question is a simple one. Is there a single chart that just tells you what the dollar is doing? There is. It's called the dollar index. And by the end of this video, you'll know exactly what it measures, what it quietly leaves out, how to use it as a filter before you pick a pair, and why using it as a trade signal is one of the fastest ways to lose money, with a very professional-looking chart on your screen. So, if this kind of content helps you, take a second to like the video, subscribe, and turn on notifications so the next lessons reach you the moment they go live. And feel free to share in the comments which topics you would like us to explore in future videos. And if you want to support the channel on a deeper level, consider becoming a member to unlock exclusive content and help keep these lessons coming. You'll also find links to our trusted partners in the description below. Using them costs you nothing, and it directly helps the channel keep producing free educational content like this. Let's start with the problem, because it's a real one. Last video, we saw that when the same currency shows up on several of your charts, those charts share an engine, and the dollar is that engine more often than anything else. So you sit down, and to work out whether the dollar is strong today, you check Euro USD, then GBP USD, then USD JPY, then USD CAD. Now you're holding 4 half answers in your head, and 2 of them disagree with each other. That isn't analysis. That's mental arithmetic before your first coffee. So yes, there's a chart for exactly that. It's the US dollar index. On most platforms, you'll find it as DXY, sometimes USDX, sometimes just written out as US dollar index. One line, one direction, one question answered. Is the dollar broadly being bought right now, or broadly being sold? Here's what it actually is, and this part matters more than people think. The index isn't the dollar's price. The dollar doesn't have a price, it's money, and we covered that in the second video. The index is the dollar measured against a basket of other currencies, all bundled into a single number. It was created back in 1973, when the old fixed exchange rate system fell apart, and it started life at 100. So the number itself is a comparison to 1973, not to anything happening this week. And the basket has 6 currencies in it: the euro, the Japanese yen, the British pound, the Canadian dollar, the Swedish krona, and the Swiss franc. Notice something? Those are almost exactly the majors we spent all of Chapter 2 on. That's not a coincidence, and it's a big part of why the index lines up so neatly with the pairs you're already watching. But the basket is not split evenly, and this is the part nobody tells beginners. The euro alone is about 58% of it. The yen is around 14%, the pound around 12%, Canada about 9%, Sweden 4%, Switzerland just under 4%. So when you look at the dollar index, you are mostly looking at the dollar against the euro, which means DXY and EUR/USD end up looking like mirror images of each other on most days. Now look at what isn't in there. No Australian dollar, no New Zealand dollar, no Chinese yuan, no Mexican peso, no emerging markets at all. Those weights were set decades ago and never modernized. Sweden is in the basket. China isn't. So if your pair is AUD/USD or NZD/USD, the dollar index is a rough guide at best. It genuinely doesn't contain your side of the market. Right, how do you actually read it? Simply, the index goes up, the dollar is being bought against that basket. The index goes down, the dollar is being sold. That's the whole instruction manual. There is no hidden second meaning, and you don't need to stack indicators on top of it. Now, connect that to your screen, using what you already know about sides. When the dollar strengthens, every par with the dollar on the right, Euro USD, GBP USD, AUD USD, gets pushed down. Every pair with the dollar on the left, USD JPY, USD CAD, USD CHF gets pushed up. Same force, opposite looking charts, purely because of which side the dollar happens to be standing on. And that includes gold. Remember from the 8th video that XAU/USD is quoted in dollars and behaves like a dollar pair. So a strong dollar day tends to be a heavy day for gold. Not a law, but a lean, and a useful one, because gold is the instrument beginners most often trade without ever checking what the dollar is doing. One quick warning about the number itself. People get attached to it. The dollar index is at 104, as if 104 means something. On its own, it doesn't. What matters is the direction it's traveling and the levels it has been respecting lately. Treat it like a temperature reading, not a price target. And here's the most important sentence in this video. The dollar index is a filter, not a signal. It tells you which way the wind is blowing before you decide which sail to put up. It does not tell you where to enter, where your stop belongs, or whether this candle is the one. That's structure and entry, and that's the technical analysis course's job, not this chart's. So where does it sit in your day? Right at the front, before you open a single pair. You already built a session routine back in Chapter 3, so you know when your market is awake. Add one step ahead of it. Look at the dollar index, form a dollar bias, and only then go hunting for a pair to express it. And you're only asking that chart 3 things. Is the dollar trending? Is it stuck in a range? Or is it sitting right on a level where it could break either way? Trending, ranging, undecided. You can answer that in about 15 seconds, and the answer changes everything you do next. If the dollar is clearly trending, you get a permission slip and a warning in the same breath. The permission slip is that you can pick whichever pair expresses that dollar move most cleanly. The warning comes straight from last video. On a trending dollar day, everything on your screen is the same trade. 3 dollar pairs is one position wearing 3 costumes. If the index is flat and chopping sideways, that's information too, and it's the information most people throw away. A quiet dollar means the dollar isn't the story today, so stop forcing dollar pairs. Something else is moving. Maybe the yen, maybe the pound, maybe the commodity currencies, and you're staring at the wrong chart simply because it's the one you always stare at. Then there's the case that teaches you the most. Say the index is sliding, so the dollar is weak. You'd expect Euro USD to be climbing, but it isn't. It's crawling sideways. That's not the index failing you. That's the euro being weak at the same time as the dollar, with the 2 weaknesses canceling each other out. And that immediately tells you the real strength is somewhere else on your screen. Timing matters here as well. The index doesn't move evenly across the day. It comes alive when America does. The London to New York overlap, and especially that US data window we covered, roughly 1230 to 1400 UTC, give or take an hour for daylight saving. A dollar bias you formed at 3 in the morning during the Asian session can be completely rewritten by one number at 12:30. Practically, you don't need anything special to do this. Most platforms carry it. Search DXY or dollar index, and it'll be there. Some brokers will happily let you trade it as a CFD, and you can, but that isn't why it belongs on your screen. Its job is to be read, not traded. Park it in the corner, glance at it, move on. Now the honest limits, because I'm not going to sell you this as a crystal ball. First, the index is a proxy, and an old one. Frozen weights, no China, no commodity dollars, and more than half of it is a single currency. So when the euro does something unusual for euro-specific reasons, a European central bank surprise, say, the dollar index will report it to you as a dollar move. It isn't one. Second, a pair has 2 currencies, and the index only speaks about one of them. Knowing the dollar is weak tells you nothing about whether the pound, the yen, or the Aussie is the better way to be shorted. That gap is exactly what the next chapter of this course exists to close. And third, a filter is only useful if it's allowed to say no. If every reading of the dollar index somehow confirms the trade you already wanted to take, you're not filtering, you're decorating. Being willing to hear "not today" from that chart is a disciplined habit, more than an analysis habit, and the trading psychology course goes much deeper on why that's so hard. Let me make it concrete. It's the London Open. You check the index first, and the dollar has been grinding higher for 2 sessions. Your plan said long Euro USD, because you liked the look of it yesterday afternoon. The index has just told you that idea is swimming against the current. So either you drop it, or you flip the question and ask which pair actually benefits from a strong dollar. USD CAD, USD JPY, and you go look there instead. Same 15 seconds, completely different day. So here's the homework, and it's genuinely small. For the next 2 weeks, before you look at any pair at all, look at the dollar index and write down one word: up, down, or flat. Then, at the end of the day, check whether your pairs did what that one word said they would. Most people are surprised how often a single word explained the entire screen, and how often the days they lost money were the days they never wrote it down. So, is there one chart that tells you what the dollar is doing? Yes, the dollar index. One line measuring the dollar against a basket of 6 currencies, more than half of it the euro, and it exists to give you a dollar bias in about 15 seconds before you choose a pair. Read it first, trade it never. And remember, it's a summary of the dollar, not the whole truth about it. But notice what it still can't do. It talks about one currency, the dollar. And plenty of days the dollar is the calmest thing on your screen, while the yen or the pound is doing all the work. So the next question is the one professionals actually ask first. Out of everything available, how do I decide which pair to even look at? In the next video, we open Chapter 6, Relative Currency Strength, and it's the lens that turns a screen full of charts into one obvious choice. I'll see you there, trader. So, trader, if this video brought you more clarity, like it, subscribe, and turn on notifications so the next lessons reach you. And tell me in the comments what you want me to cover next. And if you want to go deeper, you can become a member of the Com Lucro Trader community right here on YouTube. It unlocks exclusive content, early access, and extra tools for your development, while directly supporting the channel. You'll also find our trusted partners linked in the description. Using those links costs you nothing and helps us keep producing this kind of educational content. And remember, the mission of the Com Lucro channel is simple. We help traders build clarity, confidence, and structure, so every decision is made with discipline and intention. Here you'll find complete courses built as a true trading masterclass. Liquidity, market structure, higher time frame analysis, and supply and demand. Always focused on reading price and executing with a professional mindset. We also cover trading psychology, risk management, and long-term consistency. Because trading isn't just about charts, it's about mindset, discipline, and execution over time. Our main courses include smart money concepts, ICT, technical analysis, trading psychology, and Wyckoff. Alongside that, we share insights from respected traders whose work helps you understand how markets really behave. Thanks for watching, and I'll see you in the next video.